In a prior video, I talked about the importance of preparing balance sheet reconciliations. Another important process during the month end close is the balance sheet reconciliation tracker. In this video, I'll discuss why the reconciliation tracker is important, show you an example tracker that I've used, and go over the process of creating and updating the tracker before, during the month close, and afterwards. Aside from being an important internal control and therefore required in most accounting teams, the balance sheet reconciliation tracker is important because it ensures that all reconciliations are completed timely. It also highlights errors when, for instance, additional entries are posted, but the reconciliation has not been updated. We'll talk about how to set up the tracker, what report to use to update the tracker throughout the close, and who is responsible for what tasks throughout and after the close. That brings us to the second item, clear accountability. Time is limited in most accounting teams, and there always seems to be too little time to get it all done. That means the process has to be smooth and seamless to not waste unnecessary time or, even worse, duplicate effort. The tracker ensures that everyone knows who is on point for setting up the tracker before month close and updating the tracker throughout and after the close. What is expected of the preparers and the reviewers of the reconciliations, who is responsible for the completeness of all reconciliations, and who is responsible for signing off on the tracker and updating the internal controls checklist. By adding a few reporting elements to the balance sheet reconciliation tracker, the manager or controller can quickly see the status of the reconciliations and determine if reconciliations should be and can be shifted to another accountant, and thereby ensure the fair assignment of reconciliations. The reconciliation tracker also shows quickly who prepares what reconciliations and that there is separation of duties between important accounts. For instance, accounts receivable and the bad debt allowance. I already mentioned that the tracker is an important internal control, but did not talk about the why. The reason is that it helps us ensure that the financial statements are only issued when we have prepared the most important balance sheet reconciliations. It also ensures that all balance sheet accounts are reconciled and that there is a mechanism in place to monitor that all new accounts are assigned to a preparer and reviewer. The tracker can potentially identify fraud by identifying missing funds or unusual activity. There should also be a methodology to assigning reconciliation with consideration of separation of duties. The reconciliation tracker also creates a paper trail so that you can demonstrate that the process requires proper completion and sign-off. In addition, it's your proof for the auditors that the internal control is in place and is functioning as intended. Finally, the balance sheet reconciliation tracker is a great analytical tool that provides you with insight into who prepares what reconciliation before, during, and after the month close. There are quite a few data points you can build into the tracker that will then allow you to fine-tune your month close process and potentially decrease the time that you and your team have to spend on the close. I'll share some of my experience from working for Fortune 500 companies and how the tracker and other tools improve the month close process for the company and the accounting teams. How exactly you set up your tracker is determined by your needs, your team's needs, and requirements and company expectations. I'm sharing the data elements that I've used in balance sheet reconciliation trackers in several different accounting teams, but of course you do what works for you. It's important to remember, though, that the tracker has to be easy and intuitive to use and update. So now let's look at this sample tracker. At the very top, we have the name of the Excel document and the time period on row 2. I like to see the summaries of the reconciliation data at the top rather than the side or the bottom of the document, but where you place the summaries is up to you. In my example, I'm tracking the following data: account number, account description, and balance in the first 3 columns. These 3 columns are updated frequently throughout the close with the latest balance sheet data. I recommend that you update it in a new tab in your workbook as to not mess up the information that preparers have already entered in the tracker. So for instance, if you have new GL accounts in your new balance sheet data since the last time you updated the tracker for the month close, the preparer information will now be misaligned if you just copied and pasted the new balance sheet data. So copy the prior tab to a new tab and start by importing or copying and pasting the new balance sheet data from your ERP, and then bring in the information from the prior day's workbook tab for columns D through L into this tab with VLOOKUP formulas. Now look at the workbook. Does it look correct? That is when the summaries at the top of the page can be very helpful. How many total reconciliations did you have on the prior day? How many do you have now? If you have more accounts than you had previously, you have an unassigned account that you need to assign to a preparer and reviewer. Once it looks okay, copy and paste special value the columns D through L, essentially eliminating the VLOOKUP formulas so that the other users don't get confused by formulas in the cells that they're supposed to complete. So what do we have in columns D through L? I have the name of the preparer, the due date expressed as the day of the close, the amount reconciled from the reconciliation, which is filled in by the preparer, the amount of the unreconciled variances, which is also completed by the preparer, variance to the GL, which is helpful to see when a preparer has already prepared a reconciliation, but the latest update of the balance sheet in columns A through C now shows an updated amount that creates the variance that the preparer reconciled. I also have a column for time to prepare in hours. This is the time the preparer estimates it took to complete the reconciliation. The date prepared, the status of the reconciliation, whether complete or not, which is switched to completed once they believe the reconciliation to be complete and no further changes to occur. The name of the reviewer and the day of close they reviewed and signed off on the reconciliation, and a notes section. In the notes section, the preparer could add notes explaining significant changes, other issues related to reconciling, or other helpful notes for the reviewer. Can you add more? Absolutely. Just keep in mind that this is completed during a busy time of the month. So don't overwhelm everyone with lots of information to complete. There's no easier way to upset the team than adding unnecessary tasks during the month close. The reporting summaries that I have at the top show a summary of the reconciliations by preparer, the number completed, percentage incomplete, and the number of reconciliations that need to be updated because there is a GL variance. In the second summary, I have the number of reconciliations by preparer that are incomplete by day of close. I use COUNTIF formulas but you could also do pivot tables or use other formulas. In addition to these tables, you could track the time it takes to complete reconciliations and determine if there's an opportunity for automation. You could focus on reconciliations that are prepared on day 4 and see if some of those could be completed prior to day 4. Also, you could use these summaries to see if some preparers have a heavier load on certain days of the close. In my experience, it can also be really helpful to have everyone take part in a time study to figure out where the team has the most opportunities to reduce effort. For me, it was always about achieving a better work-life balance for my team, since I did not want to lose anyone because of the workload. I spearheaded a 2-week time study pilot, and the results were so eye-opening that all my colleagues agreed to have their teams take part in a 3-month time study. The results were stunning, and we spun so many efficiency projects off of that time study that it kept us busy for 2 years. So what did we find? We found that we were spending a lot of time on reports that were a nice to have report, but the recipients weren't always doing something actionable with it. The recipients certainly weren't willing to pay for it via an intercompany charge. We, of course, didn't eliminate all reporting, but sometimes just reduce the frequency. With a time study, we were, for the first time, able to see how much time it took different divisions to prepare some of the reconciliations. We focused on those accounts that took hundreds of hours across all divisions to reconcile, and researched and later implemented improvements such as system reporting and automation to shorten the time it took to reconcile the accounts. The time study also resulted in additional training on Excel functions, SQL, and journal entry automation as well. In addition, we kicked off several improvement projects where we collaborated with other teams such as the actuarial team or operations that were impacting our month close. It was a huge success in my opinion. I can definitely highly recommend reporting on various aspects of the close. Like the saying goes, that what is analyzed tends to improve, that what is analyzed and reported on improves exponentially. But enough of that. Let's talk about the actual process around the month close balance sheet reconciliation tracker. The tracker should be prepared several days before month close. It's good to assign one person to handle that, but be sure to have a backup and perhaps rotate the assignment a few times a year. During the close, the tracker needs to be updated a few times a day, maybe 9 a.m., 2 p.m., and 5 p.m. Set expectations with the team and request that all preparers update the tracker as soon as they complete reconciliations. The reviewer should frequently review the reconciliations, but depending on the length of your close cycle, it might be better to wait until day 3 of the close if you have a 5-day close cycle to review and sign off on the reconciliations. However, you know your month close process better, and you know what makes sense for you and your team. At the end of the close, before the financial statements are issued and published, the reviewer should review the tracker to ensure that all material reconciliations have been prepared and reviewed, and that the unreconciled variances are within requirements. Once all reconciliations are prepared, the department lead should sign off on the tracker and check off or sign off on the internal control checklist for the reconciliations as well. I hope this video was helpful. Feel free to post about your team's practice around account reconciliations.